Yes, for the past, this is my third week. I started the series on why life insurance is a benefit to the assured. So we've talked about, we discussed when I was starting this series, I made us understand that we have 3 types of life assurance for individual that as an individual, the 3 forms of individual you can go into of life assurance policy you can go into are 3. That is the term assurance, the basic types of life insurance products. They call it the term assurance, the whole life assurance, and the endowment assurance. So the first week we discussed about the term assurance. We said it's the cheapest and is the easiest form of life insurance, but that there is no surrender value. Then last week, we talked about the whole life assurance policy. We talked about the whole life without profit, the one with profit, and the low cost. So those are the things we have talked about. We discussed how it is of benefits to the assured. Those are the things we have discussed. So today, we'll be moving on to the 3rd form of life assurance, and it is called endowment policy. Last week when I was talking about whole life, the one without profits, I said it is not an attractive policy. But today, let's look at what endowment policy are. So I want to welcome every one of us for that are joining me once again. And those of you on Facebook Live, I want to say thank you for joining me. So today's we'll be talking about endowment policy. This endowment policy, I would say, it's a form of an hybrid policy. Well, how do I mean by an hybrid? It picks futures from term assurance, and it picks some futures from whole life assurance. If you remember when we were talking about the term assurance, we said that one is a pure form of life insurance, no surrender. The policy only pays when there is death. That is term assurance for you. Once the life assured lives beyond the duration, there is no payout. But that the term assurance only pay out when the life assured is no more. And when we are talking about whole life insurance last week, I discussed with us that in whole life, the one with profits, that it participates in the investment of the life office. So there are bonuses, there is profit that is attached to the life assurance, to the whole life assurance, so that like the other one that we discussed, that we said, that there's a form of the whole life that if the assured lives beyond there are 2 forms of benefit that can be paid. Either the sum assured with, either the basic sum assured with bonuses, or the guaranteed sum assured. And I was able to let us understand the difference between the guaranteed sum assured, which is the death benefit, that is, if depending on the duration. I told us that whole life assurance, once you pick it, is for the whole life. If you pick it at age 30, it means like maybe for the next 35 years, 40 years, you are on a whole life assurance. So, but we said that when at the point that the assured is dying, it depends on the type of the benefit that will be paid. Either the basic life assurance with bonuses, or the guaranteed, whichever is better. All these things that we discussed last week. So now this endowment policy is now an hybrid of the 2 policies, that is the term assurance policy and the whole life assurance policy. Now the hybrid, in the sense that it gives you the life cover that term assurance gives you. Endowment policy gives you the life cover that term assurance gives you. Why? It also gives you the bonus, the profits that whole life gives you. I hope you can all get it. So it's a sort of a combination of the 2 previous ones we have discussed, which is the term assurance and the whole life. So this endowment policy, it's so you are having two benefits there. That is, it gives you the life assurance. That is, in case the assured is no more, the beneficiary enjoys the payout. But if the assured leaves, I mean, if at the end of the policy there is no death, if the assured still outlive the policy, the assured still gets what is called maturity benefit. I hope I've been able to explain to us, and I believe you get the point I'm trying to make about the endowment policy. So this endowment policy is a form of a combination of both the term assurance and the whole life policy, because it picks features from term assurance and it also picks features from whole life policy. Now let us look at the benefit of endowment policy to the assured. It is the first thing is that it is a substantive contract. How do I mean by that? A substantive contract because the payout is guaranteed. It has a payout, that is, the assured knows that at a point there will be a payout. So it has that cash value. It has the cash value attached to it. So another benefit is it has a maturity date. So the assured can look forward to their maturity date. So when you pick up endowment policy, it's not about death. You are not like, okay, since it wants to pick the life insurance, it's not all about death. The assured can look forward to the maturity date, because if you outlive the policy duration, you will be paid maturity benefits. So it's a benefit to the assured. And it has an investment link. It is an investment linked policy. That is, you know that although it's a life policy you have picked for yourself, but it's also a form of investment, because there will be bonuses depending on it is structured from one life office to another. But the basic, the fundamental is it is linked with investment. The beauty of this policy is that it attracts bonuses, it attracts interest, it participates in the investment of the life office. So it's an investment linked policy. So you know that once you do not die in the course of the policy duration, you are at maturity, you are entitled to your sum assured, even with the accrued interest or bonuses that would have been added to it. So it is indeed a benefit to the assured. Now, it has a surrender value. How do I mean by that surrender value? If the assured picks up, now let's work with figure now with statistics. If maybe assured picked up a 10-year policy, endowment policy, it depends on how these things are structured. No, it differs from one life office to another. But I'm describing to us the fundamental, the principle behind all these policies. So it has surrender value. The surrender value says that, let's say, for instance, if an assured picked up a 10-year policy, endowment policy, the surrender value could be the surrender time can be maybe after 3 years or after 4 years. You can surrender. That is, you can decide that, oh, you are not doing it again. So it would have attracted a surrender value. It depends on the terms and conditions of that policy. But what I'm discussing with us is that the endowment policy has a surrender value. That is not necessarily that you wait till the end of the policy, but it's always better. Please get this right. It's always good to wait to the end of the policy duration. But if for one thing or reason or the other, you have cause to cash out, you can wait for the surrender value, and it has surrender value. I told us when we were discussing term assurance that term assurance does not have surrender value. So endowment policy has a surrender value. So also it can be used as collateral, for loan. You may need, loan in bank, in financial institution, depending on how it is structured, or depending on that kind of policy you are the financial institution you approach to. So but you can use your life insurance policy as a collateral for loan. Another place where your policy can be used as collateral is maybe you are a contractor and you want to do like maybe contractor performance bond. If you have a very viable life insurance cover on yourself, it can be additional requirements. So you can use your life insurance policy as collateral for loan, because just like I said, that is a substantive contract. It has cash value attached to it, so it can be used as collateral for loan. So those are the benefits of the endowment policy to the assured. Now, let us discuss the benefits of the endowment. I hope you can all see my screen. Those of you joining me on Zoom, you can see my screen. It's only the people on Facebook Live that is not seeing my screen. Now, the benefits of the endowment policy to the beneficiary. Now, let's look at it. It pays the guaranteed sum assured to the beneficiary on the death of the assured. How do I mean by that? It's a form of benefit to the beneficiary, because it gives, when their life assured is no more, the beneficiary, they drop suffer. It gives them a form of, they have something to fall back. The beneficiary have something to fall back. So it pays the guaranteed sum assured to the beneficiary. Then it provides financial protection to the beneficiary. Just like the first point, it provides that financial protection for the family, especially if it is the breadwinner that is no more. And if the breadwinner puts in place a good life insurance policy, at least the family can still pick up from there. It's an intruder-free estate for the named beneficiary. How do I mean by that? In this part, let me cite an example. In this part of this part of Africa, some people, once the beneficiary, maybe the husband is dead, the family can come and invade, and they can even, at some instances, they can throw the wife and the children away. They can take over. They will say, oh, it's their brother's property, this and that. That is, they can deprive the immediate family of the deceased from their inheritance. But this one, when life insurance is put in place, nobody can intrude. It's only the named beneficiary that will have access to that estate. It's not like maybe you have companies, you have houses that the extended member of the family can come and take it away from your spouse and children. But if you put life insurance in place, so far it is, maybe let's work with the example. Maybe a man, a man mostly is always the breadwinner. Now, if the man puts life insurance in place and maybe he has put the wife or as a beneficiary, the family cannot intrude that estate. The family cannot come and hijack it, because life office will not pay to the extended family. Life office will pay to the named beneficiary. So it is an intruder-free estate for the named beneficiary. And it's also a legacy estate. Now, what do I mean by a legacy estate? I will give an example. I have someone that once told me, in my early years of starting life, coming into the insurance industry, I was talking to one woman that day about life insurance, and the woman was so excited with my presentation, and I was like, because most of the time when people hear life insurance, they're like, I will not die in Jesus' name, this and that. But that woman was so excited. He now narrated her story for me. She told me that her late father put life insurance in place. And when the man was no more, they were able to benefit from the policy. And because of that, that woman fell in love with that particular company. I will not mention any company because there is no paid advert for it yet. So that woman said because of that life insurance office were able to fulfill their own part when the father was no more. Till that time that I was talking to that woman, he said she had always been patronizing that life office. So that's what I mean by a legacy estate, because you look at it that if I have enjoyed from this, then my children too should enjoy for it. So it becomes a legacy estate. So endowment policy, life insurance policy is a legacy estate that anyone can leave for the beneficiary. Now, because of our time, it's just 30 minutes interactive session with Grace Odo. Let's quickly run through this bolt-on options. This bolt-on option is the same thing as what we call optional extension. When we were discussing comprehensive insurance and all that, we're talking about optional extension. So these bolt-on options are additional benefits that you can enjoy as the assured, but with additional premium. When you pay additional premium, you will enjoy additional benefits to your life insurance policy or your endowment policy. These are disability benefits, double accident benefits, increasing cover option, critical illness cover, terminal illness cover. So you remember we talked about personal accident insurance about 3 or 4 weeks ago. Instead of picking, you are picking personal accident insurance, you are picking life insurance, you can combine all of them together. With your life insurance, you can add, if you add like double accident benefits, means if the person died as a result of accident, it will take two sum assured. That is, let's say your sum assured is 20 million. Now, if you now add double accident benefits, it means what your beneficiary will take when there is death as a result of accident will be 40 million. So that is an example of saying, okay, double accident benefits. Then increasing cover option, you can decide to be increasing your cover. Maybe you start with maybe 20 million cover. Maybe in the next 2 years, you can decide, say, okay, you want to increase it to 40 million cover, with additional, all this calls for additional premium. The critical illness, terminal illness. So all these ones, they come with additional cover on the option of the assured. No, it's an optional thing. That is why we call it bolt-on option or optional extension. So that is what I mean by bolt-on option. Then I want to wrap it up by saying the endowment policy is the most attractive form of life insurance policies, to an individual. Because why is it most attractive? Because at least there is hope that if I do not die, I will get something at the end of the policy. So it's unlike, term assurance that, when nothing happens, people will say, so my money has gone. But in the endowment policy, your money is not gone. Once you can live, when you live up to the maturity, if you do not die, you are getting maturity benefits. And if death occur before that time, the family too, has something to fall back to. So it's a very, very good life insurance policy that everyone that has the interest of the family at heart, is a very, very important life insurance policy that one should take. On this note, I want to stop and give room for question. It's an interactive session with Grace Ojo, and it's just 30 minutes. So I want to welcome question. Please, because I've used, it's almost 6 o'clock, and I always appreciate it when there's question. Please, you can unmute and ask your question. Mr. Peter Adebola, please kindly unmute and ask your question, sir.
Okay, good evening, madam, and good evening, everyone.
Good evening, sir.
I think today is a very interesting presentation again. Thank you very much.
Thank you, sir.
I think looking at the past three programs that we have been having, I think today I like this particular policy that you call endowment policy because of the surrender value that you mentioned. That if after a while I decide that, well, I don't want to continue in this life insurance policy, I can decide that I want my money. But the question I want to clarify is this, that how do you determine the surrender value? Will I know my surrender value right from the time that I'm signing the contract? Or will you advise me at the point that I said I'm no more interested in the life insurance policy? That's question number one. Then question number two, term insurance policy, you both agree on the time at the beginning. Endowment policy too, am I going to agree on the time with my insurer that, okay, I want to do endowment for 15 years, I want to do it for 20 years, or how does it play? Or is it the insurer that is going to determine the number of time that, number of years I'm going to take that policy? The one that is more important in this question is about the surrender value. How do you determine the surrender value? How am I going to know? How I'm going to be paid if I decide tomorrow that, look, I'm not interested in this life insurance policy again. I want to get my money. So how do I determine my surrender value? How will I know? Thank you very much, ma'am.
Thank you, Mr. Peter. I really appreciate you for that question. Yes, the surrender value, everything is always stated in the policy that if you have cash, if you decide to go at social period, this is the percentage. It's not what I can just say, okay, I'm saying it's off it. It's always written in the policy that if, let's say your policy is 10 years, no, fine, it's you that will determine. You might say, okay, you want to pick 5 years, 10 years. It depends on the products such life office has. So let's work with example. If you say you are taking 10-year policy, now everything would have been stated in your policy that if you are, they might say the first 2 years you cannot surrender. It depends on the policy terms and conditions. The first 2 years, most times you cannot surrender. So maybe they will now say, okay, if you are surrendering after 36 months or after 3 years, these are what you will get. You will know it from the onset because it will be stated in your policy. It will be stated in the policy document. So that is how you will know what you are getting, at what stage and what you are getting. Then it's you that will determine the number of duration that you want. I believe I've been able to answer. I believe that answers your question, sir.
Yes, thank you very much.
Okay, I really appreciate it. I need more questions. We still have a few times. If you are watching me on Facebook Live, you can type your question. I will respond to it later. So please, I need more question, please. I still have like few minutes to go, so we can still ask questions. Kindly unmute.
Thank you, Ma, for your presentation. Okay. Good evening, Ma.
Okay, you're welcome, Lola.
Yes, I want to ask a question about age, like
age. Okay.
If you're like already, like how old can you start the policy? So for instance, if you're already like over 60, can they still start the policy for such person?
Okay, thank you, Lola, for that question. Yes, the minimum age, just like any other contract, the minimum age is 18 years. You must be an adult. Minor don't go into contract. So also life insurance or insurance policies, minor will not be allowed to go into it. So the minimum age is 18, and the maximum age for life insurance is, depending on the life office, maybe 65 or 70. Like when we were talking about whole life insurance last week, I said if you have paid to some certain age, even though you stop paying, your life cover still goes on, but that is on whole life insurance. But endowment insurance doesn't work like that. So once you are in some offices, in some life office, once you are 65, you cannot pick up a life insurance policy. So we mostly between 65, 60, 65 or 70 maximum, you will not be allowed to pick up a life insurance policy. I hope that answers your question, Lola.
Yes, my does.
Okay,
Thank you.
Yeah. Okay, I think I have chat. Please let's mute our mic. Ayoride, thank you for joining, but mute your mic, please. I have a question on the chat. Good evening, everyone, and thank you, madam, for addressing the concern. I had arising from your session last week. I have to leave. Oh, okay. I thought he's asking question. He's just making a compliment. Okay, I have to leave the platform now. Thank you, sir. So who else wants to ask question? I need one more question.
I have question.
Okay, go ahead, sir.
Okay. Thank you very much once again, madam, for the opportunity to make this clarification. I just want to find out about the, you said when you were making the presentation that we can use endowment policy as collateral for loan. Am I correct?
Yes, sir.
Okay, so this loan that you are talking about that we can use endowment policy as collateral, is it only for mortgage loan or for any form of loans?
Okay, thank you, sir. It depends on the type of loan. I know the vivid example I gave was if you are a contractor that you want to do performance bond, that it could be accepted as one of the requirements. So it depends on the institution where you want to pick loan, and depend on their choices if they want. Do you understand? But you can use this policy as collateral for loan. I cited Mr. Fatai Adigberu. Mr. Fatai, sir, please, do you have any contribution to that? Good evening, sir. Mr. Fatai. Is Mr. Fatai still there?
Good evening, my sister.
Good evening, sir. Thank you, sir.
I'm with you.
Okay, sir. Do you have any contribution to the answer to the last person's question? He said, what kind of loan can the endowment policy be used?
There's no limitation to the type of loan, depending on the person giving out the loan. But as you rightly mentioned, when you are or you want to get any contract house or any property to pledge, you can use your policy as collateral for that loan, because the person advancing the loan will want some sort of security. And the doubt or the fear there is that it is believed that as long as you are alive, you'll be able to, in case of untimely death. So that policy will be called upon to make good.
Okay. The network is fluctuating.
And as well be used when you have mortgage, instead of throwing your dependents, your family into move. Is it better now?
Yes, it's better, sir.
Okay. I said that it can as well be used under mortgage.
Okay.
If you to protect your family against any mishap, because it is believed that as long as you are alive, you'll be able to pay your mortgage loan. But what happens in case of untimely death? The dependents might be thrown into trauma by not being able to meet it, or the policy will come to your aid to pay the outstanding loan. So likewise, when you are getting any loan, any form of loan, majority of the standard organizations will ask for property or any other thing, but your policy can as well be pledged for as a security for the loan. So that's the field that you have to contribute.
Thank you, sir, Mr. Fatai Adekunle. I really appreciate it, sir. Do we have another person who wish to ask question? I think there's another chat. Let me read it. Okay. Okay. Someone is apologizing for not being able to attend the meeting. Okay. Who else want to ask question? I really want to appreciate everyone who have joined me on this meeting this evening. My contacts are on the screen: info@graceojoblog.org, info@bimboconsultancyservices.com, or 08026940605. And I usually upload the recorded version of this meeting to my YouTube channel. Kindly help me rebroadcast this program once you have it delivered to you from my link there. And I want to encourage everyone to help me subscribe to that YouTube channel. I really want to appreciate you. Those of you watching me on Facebook Live, I really want to appreciate you. Kindly help me subscribe to my YouTube channel. I really thank you all for the encouragement you are giving me. I really want to say thank you very much for making yourself available for this evening program. Let's meet again next week, Wednesday, between 5:30 and 6 o'clock, and then 5:30 p.m. and 6 p.m. Thank you, everyone. Do have a great evening.
Thank you, ma.
Thank you, sir.
Thank you
very much, ma.
Thank you, sir. I really appreciate. Thank you so much. Do have a great evening.
So sorry for joining very late.
Okay, apology accepted. We've seen it on the chat. Thank you.
All right.
Thanks for having the meeting at heart. I really appreciate it, man. Thank you, everyone. I cited some people, maybe they've left. Well, I really want to appreciate everybody. Do have a great evening.
Have a great good day. Have a good day.
You too. Thank you, everybody.